makers and market movers. This is The Pulse with Francine Lacqua.
Welcome. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. The UK Prime Minister Rishi Sunak fires his Home Secretary, Suella Braverman, after she criticised the police over the handling of the protest marches. Now, Moody's threatens to remove America's last remaining AAA debt rating, citing political polarization as a risk of a U.S. government shutdown looms again. Plus, China is said to be weighing an end to its freeze on Boeing purchases ahead of Wednesday's meeting between Presidents Biden and Xi. We'll bring you, of course, the very latest on the summit. So first thing is first, we have a lot to get to, especially in politics. But let's quickly check on the European markets map. But now, for the moment, you can see a lot of these markets are actually holding on to gains. I have the FTSE gaining some 0.7%. We're seeing similar gains in Milan, but also the CAC 40. European stocks really rising at the start of the week that are going to feature some pretty key readings in inflation in the US and the UK, which, of course, once again, investors will try and study very closely for indications of interest rate policy. Just one currency that we need to keep an eye on. I mean, we keep an eye always on all currencies, but the yen is actually feeling some pretty big moves, falling to a fresh 2023 low against the dollar. Again, raising concerns, actually, that authorities will intervene to support the currency. Now, the U.S. still faces a risk of a government shutdown at the end of this week, despite a new compromise plan by the House Speaker, Mike Johnson, that leaves out hardline conservative priorities. Now, a shutdown would threaten a downward U.S. credit rating adjustment by Moody's, which has already lowered its credit outlook. Now, in a note on Friday, it basically says continued political polarization with U.S. Congress raises the risk that successive governments will not be able to reach consensus on a fiscal plan to slow the decline in debt affordability. Now, for a look at all of this, let's bring in Bloomberg's Jill Dices with more. Jill, good afternoon. Good morning. Thank you for joining us. The government shutdown is looming on Friday. So what's in the stopgap bill?
Yeah, so I think with this particular bill that Mike Johnson's put forward, the idea would be to essentially just extend, I think, some services for some government agencies through about mid-January for a few, and then the beginning of February for the others. This does leave out some things that, as you mentioned, some really ultra-hardline conservatives are really looking for, including an immediate 30% cut to spending. It does also leave out, so I think that's the case where you might see some pushback from the ultra-conservative side. It does, though, leave out some other facets, including spending for Israel and for Ukraine. So at this point, it's the sort of bill where it's like we might be able to see it get us through to the end of November 17th and to November 18th, averting another government shutdown. But this ultimately just really kicks the can down the road. And I think, as Moody's pointed out, just doesn't really solve that larger issue of what's going to happen with spending more in the long term, especially as we get into 2024, which, of course, is a presidential election year where we'll continue to see that level of polarization.
Yeah, I just find this so crazy, Jill. I feel like every 3-4 weeks there's, this concern that, again, there's going to be a government shutdown. And actually, full disclosure, I walked in this morning. I said, what, not again? And what are the odds, once again, as you laid out, that we just kick it down the road?
Well, Francine, I think that's the whole point that Moody's is making, right? I mean, yeah, I'm glad you brought that up, because I think that at that point in their note, like, it's not a downgrade in the way that we saw Fitch downgrade the U.S.'s credit rating from AAA earlier this year. But what it did point out was that idea of political polarization in the U.S., along with the U.S. fiscal position being a major concern for Moody's. And I think that when you've got these types of measures where you're just creating these stopgap spending bills every few weeks, then that continues to outline that issue of if there's no long-term solution for government spending, how exactly are you supposed to be more confident about the nation's fiscal position? So yes, I think at this point, it's in the name, right? Stopgap spending bill. It's really only a stopgap until we get actually into next year.
Yeah, you could also call it Groundhog Day, starring Bill Murray. Jill, thank you so much. Jill Dice is there for joining us with the very latest on, of course, this government shutdown possibly looming. Let's now take a market angle. Joining us now is Marija Veitmane, Senior Multi-Asset Strategist of State Street. Marija, here we are again. First of all, it's been way too long since I spoke to you last, so thank you so much for coming on the Pulse. But here we are again with a potential government shutdown looming. If actually Moody's downgrades the U.S., does it make a big difference on how you want to play the U.S.?
Good morning. And yeah, we're very pleased to be on the program. I mean, I think in general, our market view is quite negative on equities. So shutdown is kind of another step in the problem. And I think as your previous guest suggested, is that it's very difficult to see like fundamental way out of this problem. And we know that, I mean, one thing that kept US stocks fairly like resilient this year was fiscal spending. And that is again increasingly questioned. So no, I agree. It's very difficult to see a good resolution, long-term resolution. We know that Republican Party is fractured. Democrats don't want to help them, particularly like as election year is approaching. So yeah, it is a challenging backdrop, and it's difficult to see equities benefiting from it at all.
So what does that actually mean for markets? We have also great stories saying, Goldman Sachs and Morgan Stanley are definitely diverging on some of the Fed rate cut forecast. I think Morgan Stanley sees a 300 basis point of rate reduction. Where do you stand on when interest rates will be cut?
Yeah, I think we'll probably make situation more confusing. So we strongly believe that recession would be very, very hard to avoid. And the reason for that is that US economy is still quite resilient. So we had a strong GDP print, we have labor market being strong, we have still inflationary pressures in the economy. So the situation is current economic backdrop is fairly resilient. So which means that when we see kind of that makes it kind of a bit inflationary, so that would make it very difficult for Fed to start cutting rates next year when we see kind of economic slowdown. So current strengths makes this higher for longer outlook much more likely, which will create stronger recession and very, very challenging backdrop for equity market.
So, Marija, what does it mean for where you want to be invested? And actually, is there a good entry point?
Yeah, so that's a kind of interesting point for us, is that what we quite stressing with in our client discussion is that investors are really positioned for soft landing. We see it in investor holdings, so their average holding, like aggregate holdings allocation to equities is still above average. We still see quite big positions in cyclical stocks relative to defensives, which means that this kind of soft landing is really kind of investors' main expectations. We see that in earnings outlook, we see that in economic forecast. We kind of see this market is not expecting deep recession, which to us makes it huge pain trade. So which means that we are likely to see more downside before we see upside. So for now, we're staying out of the market. We prefer cash to other asset classes. We prefer kind of safety of like within relative positions. We prefer kind of relative safety, so large caps versus small caps. We prefer like quality, like stable earnings, stable dividends. So that type of trades relative to more cyclical. So, but generally staying out of the market.
So, Marija, what does it mean for earnings? Are you actually expecting multiples, the kind of growth that we've seen over the last couple of quarters, especially in Europe, and that the U.S. will be hit, or is there more leg up for U.S. equities?
So it really depends on kind of your perspective. So if you are like absolute return investor and you can choose between asset classes, so we'll expect more downside in equities. If you are equity kind of long only investor and you need to allocate within various like equity markets, then we think that US will do better than Europe. I mean, Europe is very cyclical market, depends on global growth. That where we see the biggest challenges, while US, I mean, thankfully has tech sector that we continue to expect perform reasonably well because it's more kind of larger cap stock have better access to capital, they better protect margin, more stable earnings. So that's where potential strength is. Potential relative strengths, I should say. It has lots of defensive stocks as well. So that's an area of relative outperformance. But kind of relatively speaking, US is better than Europe, but all the rest of the world. So, but in absolute terms, it's still very challenging.
So, Maria, in terms of energy or groups that you like energy, you like healthcare, you like IT, but actually you're avoiding industrial companies and you're avoiding banks.
Yes, yeah. So that again, that's kind of the view on or the concern about global growth slowdown. So if we are right and this kind of recessionary environment is thus happening, then like financials will struggle, industrials will struggle. We believe that growth stocks will outperform value in that backdrop. So those would be like financials and industrials and probably materials would be the key areas to avoid.
Marija, as always, thank you so much for coming on. Marija Veitmane there, Senior Multi-Asset Strategist of State Street. Now, coming up, the UK Prime Minister Rishi Sunak sacks his Home Secretary, Suella Braverman, after a tense weekend of protests in London. More on the fallout in the Conservative Party. That's next, and this is Bloomberg.
Already 800 gross orders for the year.
Yep.
The likes of Air India starting the year, Ryanair, Southwest, United adding to the order base. And this year's been more of a pivot to some of the wide body orders. So we saw a strong narrow body order. No doubt the world's on fire in terms of travel's back.
Yep.
So it's natural this wide body order
Okay, you talk about the world being on fire, so let's talk about that. You've got huge demand at the moment, but you've got huge uncertainty. You've got the geopolitics, we're in this region right now. You've got huge economic headwinds also beginning to gather as well. You've got industrial headwinds. Are you surprised that this industry is sending such a positive message at the moment, given all of those headwinds?
Well, it's a resilient industry, and remember, it's an industry still recovering. So we're not surprised from that context because we're at 97% of 2019 levels. Still have bounce back left, and we're still seeing steady signals of growth in the GDP around the globe. So in that context, no, we're not surprised. Are there forces that are potentially destabilizing? Those are out there. But we think the resilience of this long-term demand is there, and that's explaining this need for airlines to get ahead and get their order book in place.
Well, that was Stan Deal, Boeing Commercial Airplanes Chief Executive Officer, speaking to our very own Guy Johnson at the Dubai Air Show a little bit earlier. Now, we're just getting, of course, the opening pre-market share price for Boeing up some 3.3%. You can see at 102.8. And this is, again, as China is buying actually more aircraft after they've frozen them off for a bit of time. The UK Prime Minister Rishi Sunak has sacked the Home Secretary, Suella Braverman. Now, opposition parties had accused Braverman of stoking division after accusing the Met Police of playing favourites with protest groups. Over the weekend, police arrested dozens of mainly far-right counter-protesters seeking to disrupt a large pro-Palestinian march in London. Now, the event coincided with the annual Armistice Day. Well, Bloomberg's Adam Blanford joins us with, of course, the very latest. I mean, this is huge news, right? And she had been very controversial in the last couple of years, but certainly in the last couple of months also with tents and homelessness. What does it mean for Rishi Sunak? Is he now going to have someone on the opposite side that will try and challenge him?
He's, thank you. He's got, this is the second time that Suella Braverman has been fired by Rishi Sunak as Home Secretary. The first occasion happened very soon after he took office. Since she's been there for the last year or so, she's been pushing a particularly quite tough line on immigration, and again, as we've seen here, on the protests in recent times. So her brand of conservatism, when she's been railing against what she sees as sort of failures of multiculturalism, she's going to sort of take that into the backbenches, and that's potentially be at odds with what Sunak is putting in government.
So, Adam, how many Conservative parties are within the Conservative Party? Like, how right-wing actually is the party now?
There's a lot of, you know, you'll see there's a host of policies that Sunak has been espousing recently, from slightly watering down the green measures and net zero to migration to a host of things that have been attempting to kind of recapture some of the votes that Boris Johnson won in 2019, trying to appeal perhaps to their base. Braverman was a core part of that. There's quite a bit of support. but there's not necessarily enough within the Conservative Party in Parliament to trigger anything as dramatic as a leadership election. And, of course, it's little more than a year. They've got little more than a year left before they have to call an election.
So, Adam, when we're hearing, of course, of a cabinet reshuffle, you can't just, sack the Home Secretary and keep everyone else as it is. But what's their strategy now to try and win the next election, which will be, given the polls, quite difficult?
Well, Sunak stood up at his party conference not so long ago, and I think even again yesterday in his communications, talking about long-term plans for a brighter future. That's sort of what they're trying to do, what they think they're trying to do. But, of course, the messaging is very difficult. They've been the Conservatives in power for 13 years. The Labour Party is equally talking about long-term and a new kind of a new path. The Conservatives are 15 to 20 points behind in the polls and have been there for quite a while. So Sunak is trying to project an air of confidence and competence. Doesn't necessarily fit so well with losing your Home Secretary on a Monday morning.
Adam, thank you so much. Adam Blanford there with the very latest, of course, on this story, and we'll continue watching further government reshuffling and bring you the very latest. Coming up, talks intensify over a potential deal to release hostages held in Gaza. Now, the latest from the Middle East is up next, and this is Bloomberg. Well, senior officials in Israel and the U.S. have suggested that talks are intensifying around securing the release of Hamas-held hostages. Now, President Biden spoke with Qatar's leader about efforts to secure additional releases, and the Israeli Prime Minister Benjamin Netanyahu hinted that a deal could be in the works.
Is there a potential deal?
There could be, but I think the less I say about it, the more I'll increase the chances that it materializes. And it's a result of pressure, military pressure.
Meanwhile, the Saudi Crown Prince Mohammed bin Salman condemned Israel's actions at a summit in Riyadh over the weekend.
We are in front of a humanitarian disaster that is witnessing the failure of the UN Security Council and the international community to put an end to Israel's brutal violations of international law and humanitarian international law.
Now let's get more with Bloomberg's EMEA News Director, Rosalind Matheson. Ros, thank you so much for joining us. So what do we actually know about these extra efforts to secure the release of the hostages?
Well, we do know, as you were saying, that the US President Joe Biden spoke with the Emir of Qatar on the weekend. And Qatar's had a very special role in this. They've been seen as a good faith actor on either side, so they're able to negotiate between Hamas, Israel and others. And it's not the first time Qatar has done that, so they've got an increasing track record of being able to do it. That said, the talks are exceptionally delicate and very cautious, and we're not yet seeing signs that a deal is near. Of course, for Israel, it might mean having to release Hamas prisoners back into Gaza, which is something the Israeli Prime Minister does definitely not want to do. And equally, at the same time, Hamas doesn't seem to want to relinquish Israeli citizens back into Israel. So little signs of progress going forward, but no sign of a deal actually eventuating yet.
And then at the same time, so we had Arab leaders actually meeting over the weekend. Did they have a united message? Emmanuel Macron came out, and I think the first world leader in G7 asking for a ceasefire.
Well, certainly expressions of concern, but this is not a homogenous group. This is a big group of states, some of whom includes Iran for a start, and some countries that are very close to Iran, and other countries that are increasingly trying to build their relationship with the West. I mean, UAE and Israel for a start, Saudi and the US for a start. These are countries that are trying to build economic investment ties with the US, Israel and others. And so there's a whole range of countries in that. And of course, Iran backs militants who are operating in Lebanon at the moment, Hezbollah against Israel, Hamas itself in Yemen also. So there's no great unified view here. They've all got their own interests of what they want in this outcome. So nothing beyond sort of bland general statements from that meeting.
Roz, at the same time, so the U.S. has struck this Iran-linked facility in eastern Syria. What more do we know?
Well, we know they hit a training camp in Syria. They've been doing that more and more in recent days. That's because there's been an escalation in attacks on US troops in Syria and Iraq since this war broke out. More than 40 attacks now that we know of, and a number of casualties in that. And alongside the increase in the attacks by Hezbollah in Lebanon into Israel, it just raises the risk again. The US gets drawn militarily into this conflict. You can see the level of concern now from the Americans about that being a possibility. Warnings now starting to creep into Israel. Could you perhaps slow it down a bit? Because we're really worried here that Iran's going to get pulled in. If Iran gets pulled in, the US gets pulled in, and then you've got a much bigger regional conflict as a result.
But Ross, also, we're looking at these horrific pictures from Gaza. Is Israel getting a lot less support?
Certainly you can see that some of the narrative globally has turned on that. Still, obviously, support for Israel in the aftermath of the Hamas attack on October 7, a terrible attack on Israel, but also increasing concern about the humanitarian situation inside Gaza. We know that the hospitals there are barely functioning. We know that there are people packed into those compounds. We know they're struggling for fuel, for medicine and so on, and really sort of calling on Israel to sort of slow down the assault as a result.
Ross, thank you so much. For the very latest, Ross Matheson, there, our EMEA News Director. Now, coming up, we look at the private equity space with the Carlyle Group Co-Founder and Co-Chairman David Rubenstein. We'll talk valuations. We'll also touch, of course, on a possible U.S. downgrade and what that means for business valuations. This is Bloomberg. The UK Prime Minister Rishi Sunak fires his Home Secretary Suella Braverman after she defied his authority over the handling of the pro-Palestinian march. Moody's threatens to remove America's last remaining AAA debt rating, citing political polarization as a risk of a U.S. government shutdown looms again. Plus, China is said to be weighing an end to its freeze on Boeing purchases ahead of Wednesday's meeting between Presidents Biden and Xi. We'll, of course, bring you the very latest on the summit. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. A lot going on for a Monday morning. Now, private capital funds managed by the biggest firms continue to highlight alternative asset outperformance versus public assets over the cycle. Last year, PE gains topped those of other types of holdings amid moderating absolute returns for the broader market. However, Bloomberg Intelligence cautions that a tighter economic backdrop could pressure borrowers' capacity to repay debt. Well, here with us to discuss all of this, co-founder and co-chairman of the Carlyle Group, David Rubenstein. He also, of course, is the host of Bloomberg Wealth and the David Rubenstein Show. Thank you, David, for joining us.
Thank you for having me.
A lot going on in the private equity. Then when you look at the cost of credit and cost of money, how much of it is it a barrier for private equity?
Well, private equity is not doing as many deals as it did a few years ago. The cost of capital is higher, obviously, but it's not the biggest problem. The biggest problem is that buyers have bought things the last couple of years thinking that they would sell them at certain multiples of return. And then sellers, sellers now, they turn it to be sellers, the buyers that were the buyers, they bought these things, now they want to sell them. When they sell them, they want to get a certain rate of return, but they're not likely to get that because the new buyers are saying we can't pay that much because the economy is slowing down and interest rates are higher. And so there's also a fear that you could go into a recession in the United States, and if so, nobody wants to buy into a recession. So I'd say the sellers are here, the buyers are here. There's a gap of 15% or so between the bid and ask, and that's why deals are not getting done right now.
So, David, what happens? Who's going to budge first, right? At some point, these two mismatches will have to come together.
Yes, the economy always works out in some way that there's a compromise between the two. But I would say right now people are waiting to see whether the Fed is going to increase interest rates again. And if they do not, whether they're going to begin to cut. And if they do, then I think people will feel a little bit more emboldened. One of the issues we have in the United States is there going to be a recession or not? Right now, I think the consensus is that there will not be a recession. But, those consensus change from time to time. So I don't know.
Yeah, and we're looking at, are you feeling actually any stress out there in the U.S.? We're looking at lending. I mean, there are these pockets actually of concern in the U.S. economy.
There's always pockets of concern. Right now, we're probably going to grow this year at 1.7%. So it's not recession-like numbers, but it's not 2 or 3%. I think the U.S. economy is still trying to figure out what the Fed is going to do. Is the Fed going to cut or not, and when is the Fed going to cut? And one of the issues that hasn't been talked about very much is the Fed probably is going to find it difficult to cut next year before the election. Because if the Fed were to cut interest rates before the election, obviously it'll be accused of helping the Democrats, and that would be very unpopular with the Republicans. So I suspect the Fed, to avoid political criticism, will probably wait to do any cutting until after the election.
Yeah, but at the same time, if we have inflation at 4% and it gets stuck at 4%, it could be very painful for them to get inflation from 4 to 2%.
Well, getting from 4 to 2 is not easy. It's easier to go from 8 to 4 than 4 to 2. 2 is what we had for 25 years, but it's not likely we're going to get down there so quickly. So the Fed has been very consistent in saying we got to get to 2%. They have said a couple times, well, 2% within range of 2% or close to 2%. So it may not have to actually hit 2% before they actually begin to cut. But it can't be 3 or 4%. They made it clear they didn't want to go to 2%.
David, where do you see deals in private equity? Again, the private equity space is changing also because of the lack of companies to buy. So you have a lot of money chasing the same assets.
Well, there are always going to be deals. People are always going to do some deals. There are deals that are going to be done in technology for sure. That's a very hot area. A lot of opportunity is now available in, let's say, fintech and financial services. Athletics, sports-related thing is also seeing a lot of activity. So I think there'll be activity. I just think the prices that the buyers are going to pay is lower than what the sellers really want. Now, that gap is about 15%, and it'll probably close, but not for a while.
And that's across the board in the U.S., in Europe, or valuations in Europe have always been a bit cheaper. So I wonder whether it's easier to do.
Well, there's still a gap here. I think here there's some countries in Europe are in recession, in effect. And so I think many people are more nervous about it than before. But I do think there is equity available and there is debt available for deals when the pricing gets closer to where people on both sides want to do it. I think their fundraising is more complicated now. Fundraising for new private equity funds is more challenging than it was a couple of years ago because of the called the denominator problem. Groups that have money have less to give out because their overall corpus has shrunk a bit. But there's still money there. People find good deals at a good price. There'll be money available.
Are you surprised that there haven't been more defaults in companies when you bring interest rates from 0% to 5%, that nothing really has been broken?
Well, there haven't been as many defaults as you might have expected, though I do expect you'll see more defaults in the real estate area and commercial real estate. Commercial real estate has changed dramatically in Europe and the United States, in part because office buildings that were used to be full are not full anymore because people work at home, so the tenants don't really need as much space. In addition, interest rates have gone up. That means the value of the building has probably gone down. So if there are going to be defaults, there are probably going to be defaults in commercial office real estate in major cities. I think that will probably be the biggest area you'll see defaults. But also remember, a lot of the loans that were done years ago are so-called covenant light, which means that it's harder to default for a while and you get a lot of leeway.
But should we worry about shadow banking more? I mean, commercial real estate is the one thing that's been telegraphed so much that I wonder whether there's going to be other pockets of the economy in distress.
Well, shadow banking, by that, what you mean is people are lending money who are not regulated by the regulators, typically. Yeah. And as you all know, private equity firms have grown large private credit businesses. So the largest private equity firms operate gigantic private credit businesses, which are not regulated in the traditional sense that banks are regulated. Right now, I think the government isn't doing anything to deal with that because there hasn't been a problem. Right. And I don't think there will be a problem. I think that the credit standards are pretty good, but there's always some challenge when the economy goes down. But right now, there doesn't seem to be defaults there, and the private credit business is doing pretty well. And that's the highest area of growth for the large private equity firms.
What's your take on China right now? How should we view China from a private equity perspective?
I was in China just a few days ago, and everybody's excited about the meeting between Xi Jinping and President Biden in a couple of days. I suspect that there is going to be some kind of thawing in the relationship. I think both sides recognize that it kind of got off track a little bit. I think the Chinese, I can't speak for the Chinese or the Americans, but I think both of them feel that there's a better opportunity now to come together, and I think they feel it's in everybody's best interest to do so. So I do think you'll see some progress there in San Francisco.
But again, as you see the trade relationship between the U.S. and China becoming, I don't know whether it is more fraught now or whether you're expecting a bit of, rapprochement with President Xi and Biden meeting this week.
Well, it's not. Summit meetings don't usually come up with solutions overnight, so it's a process. But there is still a large trade deficit the U.S. has with China, and that's not going to go away anytime soon. I do think that decoupling, so-called, is not realistic. I think globalization is here to stay, and you just can't decouple. Our economies are too interconnected, so I think that's a phrase that probably isn't appropriate. I do think the Chinese government, again, I can't speak for them, but my sense from being in China is the Chinese government would like to have a closer relationship with the U.S. government, and the U.S. government, in my view, would be they'd like to have a closer relationship with the Chinese government, and there'll be some modest progress, my guess is, in San Francisco.
But so when these two superpowerhouses are, if they don't come closer, does it mean that there's going to be more opportunities in other Asian countries for capital flowing?
Well, there's obviously some capital is moving out of China into other Southeast Asian countries and India as well. There is not a lot of feeling in the United States you should brag about doing investments in China. Right now, there's some concern that if you're too visible doing things in China, it might not be that helpful. But I do think that it's unrealistic to find the same ability to manufacture things in China as you can find in Vietnam or in other Southeast Asian countries. So there is some movement out of China, but not so much so that it's going to dramatically affect the Chinese economy.
But politically, is it very difficult for the Democrats to reach a deal with China on an election year?
I think there's one consensus in Washington. It is that beating up on China doesn't have a political consequence. So for Republicans and Democrats, beating up on China generally they think is politically okay. But that doesn't mean that you can't make a better relationship without suffering politically. So I think President Biden thinks it's better to get something done rather than nothing.
You are a great student of American history. You're very involved in trying to understand the Constitution and actually what's going on in America. As a foreigner, you kind of look at the elections and you know, there's a lot of surprising things. What do you find most surprising as an American?
I find it surprising that basically after 4 years, we're likely to have the same two people we had 4 years ago. And clearly it's going to be a very close election again. I think many Americans are surprised that President Trump seems to be the nominee likely for the Republican Party, and many Americans are surprised that Joe Biden wants to have another term. But they both clearly are likely to be the nominees, and it's going to be a very close election either way.
Okay, and we'll see what that means for business. David, stick around. David Rubenstein, they're co-founder and co-chairman of the Carlyle Group, stays with us. Plenty more ahead, and this is Bloomberg. The conversations that matter, the insights you need. This is a Pulse. I'm Francine Lacqua here in London. Now, we have two pieces of big breaking news. First of all, Emirates says they've just received an order with Boeing valued at $52 billion. Now, we're also expecting some kind of deal possibly with China, because they had frozen Boeing out for quite some time, and in the last couple of days at the Dubai Air Show saying that they will no longer actually freeze them out. So Boeing was also rising pre-market, as China said they were weighing this ending of the freezing. Now with that $52 billion extra order, Boeing up 3.5% in pre-market. The other big story is, of course, a government reshuffle here in the UK. James Cleverly, who was, I guess, until moments ago, the Foreign Secretary, has been named Secretary of State for the Home Department. So he replaces Suella Braverman. There's also an absolutely brilliant opinion piece that just crossed the Bloomberg terminal, where basically Martin Ivins says, look, if you look at the populist UK Home Secretary responsible for law and order, her main downfall was that she didn't have enough nuance. What that means longer term, whether she still will remain the darling of the Conservatives Party right wing and therefore have something challenging or have a leadership contest with Rishi Sunak, remains to be seen. So we're expecting more cabinet reshuffle, including we need a new Foreign Secretary of the UK. As soon as that's announced, we'll bring you the very latest. Now, still with us to talk politics, to talk business, co-founder and co-chairman of the Carlyle Group, David Rubenstein. David, thank you so much for sticking around. We were talking a little bit about the U.S. and China. I was also asking you what you found most surprising in U.S. politics. When you look at the government shutdown, I mean, it's unbelievable that we're here where we were a couple of weeks ago, that we can't really get our act in order in the U.S. to find a long-term viable solutions. I mean, what does it mean for businesses?
Well, bipartisanship is out the window. When I worked on Capitol Hill and in the White House, bipartisanship was thought to be a good thing, and Democrats who worked with Republicans were thought to be good legislators, and Republicans who worked with Democrats were thought to be good legislators. Now, if you work with people from the opposite party, you're thought to be almost a traitor. And so it's unfortunate that we've gotten to this mode. I do think we have a problem coming up soon, November 17th. The U.S. government runs out of money again, so there has to be some solution to that. But I think the international markets are probably getting tired, as the people in the United States, of this perils of Pauline. Every couple of weeks, we can't seem to fund the government, let alone deal with the debt issue. That's a separate problem we've dealt with, at least through the next election. But I do think we have a problem in getting the U.S. government to be funded. And I think there's a solution that's being considered now, but there'll always be some political challenges to it. And waiting until the last minute to get a solution is never a great thing.
But is this because of divisions? And actually, we're seeing divisions almost across the board in every major economy.
Because the country is split down the middle. Basically, Congress has basically as many Democrats as Republicans almost. So when you're split down the middle, it's hard for one side to say we're going to go to the far right or one side to say we're going to the far left. And you have to compromise. And if you get into politics and you don't compromise, you don't get very much done. So right now there's a feeling that compromising is a sign of weakness, but actually it's a sign of strength in my view. And I think it'd be a good idea if people would work together, but it's not working that way right now.
Is it difficult to do business in the U.S. because of these divisions? I'm also thinking of ESG and some of the climate deniers.
Well, if a company was run the same way as the U.S. Congress was run, it probably wouldn't be getting a lot of shareholders. You can't run a company or a government where you're going through a perils of Pauline every couple of weeks. It just doesn't give people a confidence that you know what you're doing. So members of Congress are all well-intentioned. I know many of them. They work very hard, but they raise their money from the far left and from the far right. And therefore, you tend to have people very much diametrically opposite. You don't raise money down the center saying, I want to do something that's good for the country right down the middle. That's what I'm going to do. That doesn't raise any money. You raise money from the far left and the far right, and members reflect that.
David, it's always quite thrilling, actually, for a foreigner to follow the U.S. election cycle in the year. What happens to businesses if President Trump gets elected?
Well, predicting a year in advance who is going to be president of the United States is a fool's errand generally. If you go back the last 10 presidential elections and say who's going to be president a year in advance, you'd be wrong almost every time. President Trump had an economy that grew when he was president. It probably grew at about 1.5% a year on average. President Biden has had to grow 2.6% in the first 2 years, but that reflects the coming out of the COVID situation, and it's probably going to grow 1.7% this year. Usually, when you look at statistics, it turns out that the economy grows the best in the U.S. when the government is divided. In other words, divided between the Congress and divided between the president. So it's hard to say, tell me who the Congress is going to be, who the president is going to be. I can tell you where the economy is likely to be. But in the end, right now, the U.S. economy's biggest concern, I think, and biggest challenge is making certain that we avoid the recession that could come about if interest rates are tightened a bit more. Right now, we've avoided the recession, and hopefully we can continue to do so.
But President Biden has actually done quite a lot in terms of legislation and pushing things through. It's not reflected in the polls. He's not getting credit for it. Why?
I wish I knew. I don't know. He has used the phrase Bidenomics. It doesn't seem to be a phrase that's catching on and giving him a lot of popular support. But he's done a pretty good job of getting the core of his legislation through. And in fact, virtually almost everything he wanted, he got through. Maybe not in the same size he wanted, but he got a lot done. But, very often in politics, you don't get credit for things. I worked in the White House for Jimmy Carter, and we got more legislation done than anybody ever had done in 4 years, but he got virtually no credit for it. Life isn't fair and politics isn't fair.
David, when you look at the economy or the markets, they seem to be ignoring a lot of geopolitics. Is this because they don't know how to price it or because they're discounting it?
Well, the geopolitics of what's going on around the world right now?
Yeah, China, U.S., right. Israel, Gaza.
Nobody really knows what's going to happen in Israel, Gaza, or what's going to happen in Russia, Ukraine, what's going to happen in China, Taiwan. No one knows for certain. So you have to factor in some uncertainty factors. I think all investors now have geopolitical experts trying to tell them, here's what's likely to happen, and here's how you can take account of it in your investments. But in the end, you're making a guess, and nobody really knows. I think having a lot of wars go on at the same time, or potential wars, gives people uncertainty. What business people want is certainty and predictability. And right now, there's a lot of uncertainty and a lack of predictability.
And you said you don't believe in decoupling between China and the U.S. Do you believe in deglobalization? That actually there's going to be more inward-looking from the major economies? Deglobalization
is a nice phrase, but it's unrealistic. At this point, economies are so interconnected, it's not realistic any longer to talk about globalization being going away. It's just not realistic, in my view. You might be able to modestly make some changes, but right now the United States is buying roughly $500 billion more or less of products and services from China, and we're selling roughly 150 to 170 billion, and that's not going to change very much over the next year or two, in my view.
David, thank you so much for coming on. The co-founder there and co-chairman of the Carlyle Group, David Rubenstein. I have some very, very big news for you, actually, and this is according to The Sun. The Sun, who I have to say is always, usually, very well informed. We don't have confirmation, but it is well informed on UK politics, and they have said that David Cameron, the former Prime Minister of the UK, who then stepped down after Brexit, is expected to be named Foreign Secretary. Now, we did have from a reliable source that just moments ago he had been seen going into number 10. This is the very latest from The Sun saying David Cameron expected to be named Foreign Secretary. And this is after the current Foreign Secretary, James Cleverly, stepped in or will step in as Home Secretary after the firing of Suella Braverman. So we'll have plenty more on UK politics. Also coming up, military talks and economic ties are amongst the priorities for U.S. President Joe Biden and China's Xi Jinping when they meet in San Francisco this week. We'll be discussing that next, and this is Bloomberg. The conversations that matter, the insights you need. This is a Pulse. I'm Francine Lacqua here in London. Now, President Joe Biden and Chinese President Xi Jinping are expected to meet on Wednesday on the sidelines of the APEC summit in San Francisco. Now, the gathering will be the first face-to-face conversation in a year between leaders of the world's two largest economies. For more, let's get straight to Bloomberg's Rebecca Chung-Wilkins. Rebecca, thank you for joining us. So what are the conversations that they're likely to have that will be going on between the two world leaders?
Well, the two sort of central issues and what has made the relationship so fraught really is one, economic curbs, which we know they've anticipated conversation on with these meetings between Janet Yellen and counterpart He Feng leading up to this meeting between Biden and Xi. And the other is Taiwan, another sort of thorny flashpoint that has remained a sticking point. Now, I think it's unlikely we see any major concessions on either side of those issues, but you know, the inconvenient truth is both Biden and Xi do unfortunately really need one another at this moment. They're both grappling with these domestic challenges at home. And so I think, you know, there is some expectation that we might see them walking away with a little bit more, something a little bit more concrete, be it on AI, climate change, or maybe even fentanyl, but something where neither side will need to make a big concession in order to still have something of a win that goes beyond just continuing to talk more.
Rebecca, you also wrote in today's Bloomberg Big Take piece on Biden's and Xi's relationship. Do you think this is the start of a more amicable way forward?
I think certainly there seems to be a concerted effort on both sides to try and open up those channels of communication. And the military element is really critical here. I mean, a lot of that was essentially frozen after Nancy Pelosi visited Taiwan last year, with Xi Jinping reportedly refusing to take calls from the White House until relatively recently. And when we look at, for example, these recent clashes between the Philippines and China in the South China Sea, it's essential that these military lines of channels of communication do remain open.
Rebecca, thank you so much. Rebecca Chung-Wilkins there in Hong Kong. Now, you can read Rebecca's Big Take article on your Bloomberg terminal. Also, the other story of the hour, of the day, probably of the week, is that, according to The Sun, the former UK Prime Minister, David Cameron, is expected to be named Foreign Secretary. Now, this is according to The Sun newspapers. We do not have it confirmed, but usually, I have to say, they're pretty plugged in when it comes to UK politics. And this is after the UK Prime Minister, Rishi Sunak, named James Cleverly as Home Secretary to replace Suella Braverman as Home Secretary. So this is official, and that's according to Downing Street. We'll see what happens next. This is Bloomberg.